Good morning, Facebook. It is 9 a.m. Central Standard Time, broadcasting live from the Chicagoland area. So this morning we're talking about um, tax-free living. We have been in the financial advising sector for 3 decades, and what we come to learn, what we come to understand, is that if your financial advisor is not dealing with your most pressing issue, which is overpayment of taxes, pretty useless to you. You know, they selling you a life insurance policy, a mutual fund, a stock, and how is that actually creating wealth for you as opposed to creating commission for them? That's a question you must ask yourself. So, tax-free living is critical because in the modern world and most industrialized uh, countries, 40+% of our income is exposed to taxation. Big bite uh, out of your earnings, big bite out of your ability to create wealth, right? 40%. That's state taxes, federal taxes, sales taxes, excise taxes, all right? Those little hidden taxes, property taxes, business taxes, 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 taxes. So the old adage that the one thing that is for certain is death and taxes, right? So if you would engage or if you were to learn the tax-free living strategy, you could eliminate that one adage that we've been living by forever. You know, taxes. You know, taxes or um, forever until death. No, they don't have to be. There are some people that are living tax-free. So let's look at that, right? So taxes, sales taxes, income taxes, both state and federal, excise taxes, property taxes, business taxes, being black taxes. Well, there is such a thing, but the monetary value we won't be able to qualify, right? So there's a rule. Good morning, brother Derek Bradley. Good to see you with us this morning. So we're talking about one of our favorite topics is tax-free living, right? So make $100,000. 40% of that income is exposed to taxes. That's 40 grand. And then if you married and you have a spouse that make $100,000, $200,000 of income, that's $80,000 exposed to taxes. My goodness, is that fair? No, that is not fair. But that's our reality. So listen, if you want to move from excessive taxation to tax-free living, you must become a producer as opposed to a consumer. And you must produce the correct things. Your productive activity must be done in the things that your government wants you to do. So there's roughly 6,000 pages to the tax code. 70 of those pages deals with numbers. How much can I deduct for that? What's my tax bracket? How much I can contribute to my retirement accounts? Things of that nature. Those numbers, 70 pages. The 5,970 and 30 pages was developed to incentives that your government wants you to do to be a producer. And if you do the things that your government wants you to do, the Internal Revenue Service become your partner, right? In wealth building. right? So they're no longer your enemy, they're your partner. But when you are a consumer, right, you do nothing but consume. Yeah, the Internal Revenue Service is not your friends. They your tax collector, right? So let's think about it. This is a monumental shift in our thinking and our activities, which is very hard to break our behavior. So we've been working all week. This is Friday. Been working all week, and we've been spending money all week, right? We spend money on rent, mortgage. We spent money on Brother Ware. We spent money morning. We spent money on utilities. We spent money on gasoline in our vehicles, right? We spent money on our cell phones, internet. So we've been spending. So the money that we're spending, is it consuming or are we producing? Right? So that's the difference. So you're going to spend money. So have you spent any money today to become a producer? What have you produced with your dollars? That's the question. Okay. So now, to get out of the consumer category with your spending, you must be a producer. You want to be a business owner. There's no secret. Hey, you W-2 employee, you're earning money, right? You earn, you spend, consuming, right? Even before you get to spend as a W-2 employee, you get your taxes taken away, so you don't have any control. As a self-employed individual, as a business owner, you get to earn, you get to spend. Uncle Sam gets to determine, he gets to tax what's left over, right? Follow that. Working W-2 employee, you working for someone else, you earn your money, you're taxed, then you spend. Working for yourself, self-employed, business owner, you get to earn, you get to spend, and Uncle Sam tax you on what's left over. That's a monumental shift, but it's not easy, right? Oh, it's not easy. So now, how do we, and here's the good news. You can do these things concurrently. You can work for someone and you can start your business part-time. So you can do these things at the same time, right? So good. So now, say you're a business owner and I'm spending. So everything I'm spending, excuse me, we still coming a long way with this COVID, but hey, we about to get there, people. So I'm a business owner. Those same expenses, those same spendings that I told you about earlier, now you're spending for your business. I got rent, mortgage, whatever your situation at my residence. So now I have a home-based business in it, and a portion of that I get to write off because I'm a producer. Then the utilities, cell phone, internet services, a portion of that. Lawn care, snow removal, home-based business expenses, or a wonderful, right? So now, got to buy that gas, that fuel for my vehicle. And now if I'm using my vehicle in the pursuit of my business, I get to write that fuel off, right? The expense of my vehicle, the depreciation of my vehicle. Wow. I'm producing. So all the money I spent in my business activity, 100% tax deductible. Not 2%, not up to a certain amount. You ain't capped. Whatever I spend, marketing, whatever, it is 100% write off, right? Excuse me. So you got to have a business. And, if you don't have a business, you got a hole in your head, right? Good morning, brother Mark Darnell. Thanks for tuning in. So if you don't have a business, you got a hole in your head, and we're trying to plug that hole. But you need a business. Now, everything that you spend in your business, 100% write off. Business travel, employee and employing children and grandchildren and things of that nature, right? So 100% write off. So now, what else can I do? Because if all that you're doing is having a business, spending your money, so that you don't have to pay any taxes, you're not building wealth. That's not that's not the idea. So a lot of business owners do that, and you guys that are in the real estate business, mortgage industry, selling real estate, when you meet that client that has $200,000 worth of income, and they that drove their income down to $50,000, $60,000, and they want $1 million house, no, you can't do that, right? So in your business, from your business, if you're going to spend, here's some things that you can invest in. You can invest in real estate. So now I have a business. I buy some real estate, right? In my, from my business. And then the revenue that comes back to my business, 100% tax free. I know you don't believe it, but there's more meat to be put on that statement than just, well, there's some tests. There's some procedures that you have to do. There's some laws that you have to abide by, right? There's some structuring that you have to do to ensure that you invested in real estate in your business, and that income that comes back to you, utilizing depreciation and other cost segregation strategies, you can actually get that money returned back to you tax free, right? So everybody's investing. You're investing in your 401ks. It's going to be hot in Chicago. I'm going to turn my air on. So you investing in your 401ks, that's a trap. That's the government is not interested in you becoming wealthy, right? So you go to a job, you work that job for 30 years, contributed to your 401k, you build up $1 million of cash. Uncle Sam got a 33% lien on that $1 million. So now that's $333,000 that you have saved for him. That's a trap, right? So the government, they don't care about you investing in your 401k, but if you invest in oil and gas and agriculture, you get a tax deduction, right? Specific stocks. So you can invest in stocks. They don't care about you investing in the metaverse. They don't care about you investing in cryptocurrency, right? All you're doing is creating more tax liability for you, where you need to create wealth and you need to create tax free living, right? So we want a business. We want to invest in real estate. We want to invest in the oil and gas and clean energy sector, the agricultural sector. So you invest in those sectors. The cost, if you hired a stock picker or an advisor, even that cost is deductible, right? And then that money can come back to you, to your business tax free. I hope you see this cycle of building wealth, how the wealthy become even more wealthier, right? So I'm glad to see some of these young entertainers that are investing in affordable housing, right? That's what your government wants you to do, right? But I don't know why they want to broadcast it. Like, oh, I'm investing in the hood. Get out of here. Everybody's doing that. You know what I'm saying? The smart people, this is what they invest in. Why you want some kudos for it, right? I'll never get it. Negroes like attention. I don't know why. Wealthy people are quiet. Poor people are noisy, right? So be quiet about what you're doing, right? Now, as a business owner, a lot of times if you carry inventory, right, you couldn't write that off. But now inventory is 100% a write off, right? So if you make candles and wax and beads and jewelry or whatever your business is, and you carry a bunch of inventory, 2017, the Donald Trump tax plan that he got through, um, it is incredible for the business owners. And trust me, I'm not trying to be political, but them Democrats are going, them Dixiecrats are going to be trying to undo all those tax breaks to the business owner, right? Okay. And here's another thing: charitable giving. When you give through your business, I've been letting a lot of people know, and you pastors on here, or whatever you call, whatever you are, tell your people to give their contributions from their business account, and they can give more because they don't have a cap on how much they can give to charitable contributions, right? So that little $10,000 that you give into the church, now you can give $20,000, right? Not be capped, right? Well, my CPA said that if I give more than this, I don't get a tax deduction because it's personal, and I'll have your business give it, right? So we understand, we got the fundamentals laid out that you need to become a producer and stop being a consumer. And I know it's difficult because our behavior, we've been trained by the largest society to be consumers, right? And because we're spending money, but it's where you spend your money, So I'm not telling you to stop spending. I'm just telling you how to benefit from your spending, right? So here's what the Internal Revenue Service wants you to be. They want you to be a business owner or professional investor, and there's criteria for this, right? So you say, well, I'm an investor, but are you a professional investor? Do 51% of your income come from your investment activities, right? Do you spend at least 650 hours a year in that activity, right? So that's criteria to be a professional investor, right? A business owner, right? So there's types of income, right? There's you need at least 7 buckets of income. Whatever, you need income, right? If you got $1 million coming from one source, hallelujah, So your income. You got earned income, which is taxed the highest, 33%. You have passive income that comes from a portfolio of real estate, which is taxed at 15%. And then you have portfolio income that comes from stocks and bonds, which is taxed at 20%. 33, 20, 15. Where you want your money to come from. So most people who are trying to create wealth, they're going to have their money come from either portfolio real estate or some stocks and bonds. Well, Joshua, I'm not interested in being a landlord with toilets and things of that nature. Oh, I got that. You know what I'm saying? Good brother Larry Collins, hometown. Yes, sir. Good to see you tuning in. So, hey, if you don't want to be doing toilets and things of that nature, that's fine, right? But you need to invest where the government wants you to invest. So you want to invest clean energy, municipal bonds, agriculture, these type of stocks, so you can get some tax-free living, right? So, all right, them is 10 ways to save on taxes, and then the lesson is yours. These are some of them calling my mini seminars now, right? So, 10 ways to save on tax. Number one, any expense can be tax deductible. Any expense, right? What about them going to the strip club and anyway? any legal expense, right? So it has to meet this test. Excuse me. Is it ordinary for you the business that you do? So, say for instance, uh, brother Larry, if I want to come down to Arkansas and do some consultations, some financial consultation, it is ordinary for me to fly down there, right? So, um, yep. So I can fly. That's ordinary expense. But now don't be trying to go um, first class because they might say, well, no, that ain't really ordinary for your business, right? Is it necessary? Yeah, if I'm gonna consult clients in other states, yeah, it's necessary to do some face to face, right? And document it. Am I going to document it, right? And we have Valerie Jones that tuned in. Good morning. So, must meet the test. This expense, is it ordinary? Is it necessary? And you must document it, right? Keep some documents, right? And we talked about the home office, right? It must be your primary place of doing business, right? Or doing it must be your primary office, right? So you say, well, I have an office uh, in Florida. I have an office in Chicago. I have an office in Nevada, right? Wonderful. But your primary office is your home office, right? So you can have multiple offices. That's not a problem, right? And so bonus depreciation and cost, cost segregation, right? Listen, you can buy you an $80,000 vehicle, and if it's over 6,000 pounds, you can write it all off that year, right? So that's why you see so many little accountants. There you go, But anyway, short, guys, accountants that are driving around in these big old vehicles, right? Good morning, brother. Who's that? Brother Dwayne Lee. So yeah, you like, wow. Why all these little guys in these big old vehicles with all these, yeah, they get to write that all off, but you got to make some money, right? That's bonus depreciation, right? Another bonus depreciation is on real estate, right? Real estate, primary or residential real estate, is on a 30-year schedule, right? Um, and then what is it? You got residential. What's the other real estate? Is commercial, right? That's on a 40-year schedule that you can depreciate, right? And then 2017, this new Donald Trump, because he's a real estate guy, they made it very favorable to hold real estate, and then you do a professional cost segregation where you can you can separate the cost of the land, the cost of the building, and the fixtures inside, the light ceilings, the sockets, the all fixtures, toilets, whatever. You can depreciate all this stuff, man, and you can never, ever, ever have to pay taxes ever again until your Democrats get in office, or whatever, whoever get in there, right? So, listen, rent. You can even rent your primary residence for 14 days, Airbnb it, and all that cash comes. So if you rented your spot for $1,000 a day, 14 days, that's $14,000 that you went on vacation, and it's tax free, right? Travel. Everybody loves to travel. Business purpose must be a business purpose. And if domestic travel is 100% deductible, international travel is 50% deductible, right? So, but here's the kicker, right? There's some other tests and rules that apply to this, but the biggest one is that the majority of the day you was working, and you spent 4.5 hours of that day working, you can write the whole day off. So how that works? So a couple of months ago, I went to Vegas and I went to see some clients, and I started running appointments from 8 to 9, 8 or 9, whatever they could meet me. Uh, by the time noon came, 1 o'clock, I had my day done. 4.5 hours. Now I can go helicopter ride, go Grand Canyon, go see a show after all my meals, everything, 100% deductible. Now if I go to I think black folks are interested in going to Africa, right? So go to Ghana. um, I'm going over there looking at some real estate. I'm going over there to do some business. 4.5 hours. That $2,000 ticket, round trip ticket, the food, hotel, everything. I was looking at, somebody showed a picture of a 4 bedroom, 3 bath place in Africa, house that you can rent for 500 a month. I was like, boy, look at that. I think I need to go over there for a few months, right? And do some business, right? And then you document. So this is going to save you some taxes, some heartache. Document all of your movements, everything you do. Documentation. The child tax brackets, right? So if you have children, grandchildren that you want to employ, they have a tax bracket, and that tax bracket is 0 up to $12,000. So you're gonna give them stuff anyway. I got my oldest grandson. He's 7. He did his first event with me. He's at the table with me. Oh, he's cute. Hand out my little flyers. And so, hey, $100, $50 for that little event. He done earned him some money, and I got a tax credit, right? Tax preparation. So whoever your tax preparer is, so stop. If somebody's doing your taxes for $300 to $500 a year, that's all you getting. You're not getting any professionalism. You're just getting somebody to input your data. You're not getting any knowledge, right? So think about it. $500, 12 months. That's $60 a month that they making off of you for doing your taxes. What kind of advice you gonna get for $60 a month? Stop playing with yourself. It's at least $1,000, $1,500 to get your taxes done correctly by a skillful person. There's someone that's gonna say, "Hey, well, listen, we're gonna save you $10,000, $15,000 with these strategies, right?" Me myself, full disclosure, I'm a tax strategist, right? And that's about $3 grand for my services, right? So you say, well, this guy charged me $300 to $500. Joshua, you charge $3,000. What's the difference? If anybody know me, you know the difference, right? And then save you some money. Never speak to the IRS, right? You need a representative to speak to the IRS. So, hey, let's go over here again, because, man, we're really over our time that we do. Got to stop being a consumer and start being a producer. I'm not telling you, you and I, we're going to stop spending, because we love spending money, right? I'm going to go spend some here pretty soon myself today. But am I going to spend it as a producer? Something that's going to benefit my business, right? Am I going to invest in real estate, right? Or am I going to invest in oil and gas, right? If I have a business that have inventory, 2017 new tax law, I can write that off. My charitable contributions, right? Stop giving from your personal check and give from your business, right? So travel. Everybody love to travel. Everybody love to eat. Fun. Make your expenses, your fun deductible, right? Big deal, right? Almost any expense that you can think of can be deductible if they meet a test. Is it ordinary for your business? Is it necessary? And documenting it correctly, right? So that's it we got for you, people. Appreciate you tuning in. We pray that this will have been beneficial for you. Let's see, I got some. Well, so I got some new comments in here. All right. Yeah. So, hey, listen. This is a big deal. This is a big deal. The majority of your money is being consumed in taxes. And if you can develop a strategy that's legal, moral, and ethical, and reduce your tax liability 50 to 70%, and then start moving to a tax-free lifestyle, that could be a game changer. That could put an additional $300,000 to $600,000 of cash in your pocket at retirement time. We can help you. Stone Consultant LLC. This is what we do. You can go to joshuapondexter.com, schedule a consultation, and we can see where we go from there. I will. These videos I am posting up on my YouTube channel, Joshua Pondexter. Like, subscribe, follow. We appreciate you. As always, we wish you love, peace, and so bye for now.